Commerce. Business activities are grouped into two broad categories, that is, industry and commerce. Commerce includes all those activities which ensure the free and smooth flow of goods and services in the economy. Commerce includes two types of activities. Number one, trade. Number two, auxiliaries to trade. Many think that trade and commerce are the same terms and can be used interchangeably. But the fact is, both the terms are different from each other and carry different meanings. Trade. Trade means buying and selling of goods and services. For example, buying goods from a market and selling it in another market at profit is called trade. These days, goods are produced on a large scale and it is difficult for producers to themselves reach out to individual buyers for selling their products. Businessmen do trading activities to make the goods available to consumers in different markets. Trade is of two types, internal or home trade. Number two, external or foreign trade. So, number one, internal or home trade. Buying and selling of goods and services within the boundaries of a nation are called internal trade. Payment for the goods and services is made in national currency either in cash or through the banking system. Internal trade can be further classified into two categories. A. Wholesale trade. It is a business activity that involves buying products in bulk from producers and selling them in smaller quantities to retailers. B. Retail trade. It is a business activity which is concerned with sale of goods in small quantities to the end consumers. Number two, external or foreign trade. When buying and selling of goods and services takes place across the national boundaries of different countries, it is called external trade. External trade involves the use of foreign currency. For example, if Mr. A, who is a trader from New Delhi, sells his goods to Mr. B, another trader from California, this is an example of foreign trade. Foreign trade can be further classified into three categories. A. Import trade. It involves purchase of goods and services from foreign countries for use in the domestic market. B. Export trade. When the goods and services produced in home country are sold to buyers in another country, it is called export trade. Third, entreport trade. Entreport or re-export trade involves the import of foreign goods with a view to re-export them. For instance, India may buy wheat from USA to supply the same to Bangladesh. No import duty is levied on these goods. Auxiliaries to trade. Activities which are meant for assisting trade are known as auxiliaries to trade. These activities facilitate purchase and sale of goods, transport, banking, insurance, warehousing, and advertising are regarded as auxiliaries to trade. These activities facilitate movement, storage, financing, risk coverage, and sales promotion of goods. Auxiliaries to trade are briefly discussed below. Number one, transport. Production of goods generally takes place in particular locations. For instance, tea is mainly produced in Assam, jute in West Bengal, sugar in UP, etc., and so on. It is because of transportation that a producer can sell his goods in different parts of the country or world. Transport facilitates movement of raw material to the places of production and the finished products from factories to the traders and finally to consumers. Second, communication. Communication helps in exchange of information between producers, traders, and consumers. The communication services like postal service, telephone service, email, etc. facilitate trade to a great extent. Third, warehousing or storage. Warehousing means storage facility for the raw material and finished goods. Usually, goods are not sold or consumed immediately after production. Warehousing helps business firms to store goods and make them available as and when required. It helps to make available many goods throughout the year. In the absence of warehousing, a producer will have to dispose of the goods as soon as they are produced. Warehouses create time utility. Fourth, insurance. Business involves various types of risks. Factory, factory building, plant and machinery, furniture, etc. must be protected against the risk of fire, theft, and other risks. Employees are required to be covered against the risk of accident. Goods held in stock or in transit are also subject to risk of loss or damage. The businessman can pay a nominal premium to the insurance company and get many risks covered in respect of factory, stock, employees, etc. It is added that some risks like war risk are not covered under any insurance policy. Loss or damage being caused at present to Ukraine businesses due to Russia-Ukraine war is not covered any insurance policy. Fifth, banking and finance. Banks provide a convenient and safe mode of payment and help in the buying and selling of goods and services. Banks also provide loans, overdraft, and cash credit facility to businessmen so that they can acquire assets, purchase raw materials, and meet other expenses and carry on business smoothly. The role of other financial institutions in providing loans to businessmen and individuals can also be not ignored. Sixth, advertising. It is practically impossible for producers and traders to contact each and every customer. Advertising brings goods and services to the knowledge of prospective buyers. Advertisements are always a paid activity where business occupies space in print or non-print media to promote its product or a service. Role of commerce in removal of hindrances in the process of exchange of goods and services. Commerce includes all those activities which ensure free and smooth flow of goods and services in the economy. Commerce includes two types of activities, trades and auxiliaries to trade. Buying and selling of goods is called trade. Auxiliaries to trade include services like transport, banking, insurance, warehousing, etc. The hindrances in the process of exchange of goods and services may be in respect of persons, place, time, risk, finance, information, etc. The hindrance of persons is removed by trade, thereby making goods available to the consumers from the producers. Transport removes the hindrance of place by moving the goods from the place of production to the markets for sale. Warehousing activities remove the hindrance of time by holding of stocks of goods to be sold as and when required. Insurers remove the hindrance of risk by providing cover against loss or damage caused to stock, buildings, etc. by fire, theft, etc. Banks and financial institutions remove the hindrance of finance by providing the capital required. The hindrance of information is removed by advertising activities, which provide information to the consumers about the goods and services available in the market. So, commerce removes all the hindrances in the process of exchange of goods and services. Thanks for watching. If you like our course, please spare some time to give a star rating to our course.